Datos como para preocuparnos, pero vamos a seguir indagando también en este mercado de renta fija y lo vamos a hacer con AllianceBernstein. Tenemos ya a Arnaud Mounier, que es jefe de desarrollo de negocios de renta fija en AllianceBernstein. Arnaud, thank you so much for being in Negocios Televisión. Good afternoon. Probably you're on mute, Arnaud, because we can't hear you.
Sorry for that. Yeah, thank you for having me.
Now we can listen to you perfectly. Thank you, Arnaud. After a very strong end of 2023, fixed income markets are off to a more difficult start of 2024. How do you explain it, and how should investors think about it?
Sure. Well, for us, it's a continuation of what we saw all year long in 2023, which is markets trying to guess the timing of central banks' next actions. And specifically in this case, the timing of the first rate cuts by the Fed and the ECB. In November last year, central banks surprised the market with a fairly dovish tone, and that triggered the significant rally that you mentioned. Then the market got somewhat carried away and anticipated first rate cuts to happen as early as March and April this year. Then central banks poured some cold water on this anticipation by indicating that rate cuts could happen closer to June, July, and again, very dependent on how inflation would progress. So we think investors should definitely brace for some short-term volatility in fixed income markets and stay quite nimble in terms of duration exposure. This is for us a good environment for active portfolio managers to add value to the investors.
Arnaud, is this volatility in interest rates enough of a good reason for investors to stay in cash?
In our opinion, the short answer is no. When you think about it, we have about $6 trillion in money market fund, including about 750 billion in euro money market fund. So very significant amount of cash waiting on the sideline. When interest rates starts to drop, some of that cash will need to find a new home. And even if only a portion of that amount goes into fixed income market, you could see bond yields dropping very quickly and valuation across fixed income sectors to get very expensive quickly. So when we look at the previous rate cut cycles in history for US and for Europe, what we found is by waiting on the sideline for the first rate cuts to happen, investors are taking the risk of missing roughly 1/3 of the performance in fixed income market. So really our recommendation to investors is not to focus so much on the short-term volatility, but to focus on medium to long-term, I would say, outlook for interest rates, where we have more clarity that interest rates in Europe, interest rates in the US are very likely 12 months from now, 18 months from now, to be lower than the current level of interest rate. And that should bode well for fixed income market.
Income market do you prefer at the moment? Is there anything that we should avoid as investors?
So look, now that interest rates have again risen to a fair extent for the first 6 weeks of 2023, we are happy to add a bit more duration to our portfolios. We do that by buying government bonds, German bonds in Europe, US treasuries, agency mortgage-backed security in the US. So we really want to have more interest rate exposure at this level of interest rates. On the credit side, we tend to be focusing more on BBB rated, BB rated corporate bonds. We think the default risk for those bonds is still very low, despite more challenging macroeconomic environment. But we think that from a risk-adjusted return point of view, they add a lot of value to your portfolio. I think as we think about avoiding some spaces, basically what we tell clients is not to go too crazy on credit risk. We avoid single B rated, we avoid CCC rated bonds, where we definitely see that in 2024 you will have a pickup in default rates. You will see more downgrades. And so we don't think that for reaching a yield of 4%, 5%, you need to go too, I would say, too deep into the credit quality. So that's, I would say, the main thing that we recommend to our client at the moment.
Arnaud Mounier from AllianceBernstein, thank you so much for being in Negocios Televisión. It's a pleasure always to count here with you. Thank you, Arnaud.
Thank you. Bye.